Well, let's get talking now. A lot of reactions have trailed this development, but today, a former deputy governor of the Central Bank of Nigeria, Professor Kingsley Moghalu, has expressed his dissatisfaction of the call by the International Monetary Fund for Nigeria to raise taxes. Mr. Moghalu, in his tweet on Monday, said the recommendation by IMF would not solve Nigeria's economic crisis. According to him, the country needs more efficient and widespread tax collection. Well, it will be recalled that the IMF has recommended that the country needs to raise income from taxes, particularly through ensuring compliance and expanding the tax net in order to help it generate more revenues and curbing, to quote, burgeoning debt. Well, let's put this into proper perspective, looking at all of the contributions, let me use that word, from the IMF ahead of the plan subsidy removal and all of that. A fiscal policy partner, Africa tax leader with PricewaterhouseCoopers, Mr. Taiwo Oyedele, joins me via Zoom to understand all of this with the IMF. Good afternoon, Mr. Oyedele. It's good to have you on the program.
Good afternoon, Tolu.
Well, I know you're aware of all of the recommendations and comments from the IMF, but in all of them, which do we start with? The call for increased taxes has been generating comments from all and sundry. NECA has come out to say, no, we are against this. And just today, former governor of the CBN is saying that's not the way to go. What is your reaction to this?
Yeah, thank you very much, Tolu. I think the recommendation by the IMF, you need to break it down into different aspects, and even when you narrow down to the tax recommendations, that also in itself requires some disaggregation as to what exactly is the IMF saying. So when the IMF says you need to raise taxes, so it means two things. One is that you need to collect the taxes you already have in place so that everybody is paying their fair share, and you reduce the compliance gap, and of course, tackle tax evasion. I think nobody can disagree with that. We need to move from this high level of non-compliance and tax evasion, sometimes even by government-owned agencies. We've seen reports over reports by the Auditor General for the Federation, where even the Presidency, the National Assembly, and the EFCC have defaulted in paying their taxes. We also have that in the private sector. We have it for individuals. We need to address that like yesterday. There's a second aspect of this tax conversation, which is the bit that many people disagree with the IMF, including myself, as well as the organized private sector. That is when you are suggesting that government should introduce either new taxes or should increase the rate of existing taxes. One that the IMF would normally and quickly refer to is the VAT rate, right? Many of us who are involved in these matters of taxation, we can tell you that Nigeria's VAT system is not a proper VAT system because you are not allowed to claim a lot of the VAT that you incur in your production process, including on services and in buying your assets. Which is different from what you find in many countries around the world. So even though our rate appears to be one of the lowest in the world, in terms of the real impact, it's much higher than the statutory rate. Now, the other one is to do with excise. And I see you mentioned that in your opening presentation. On one hand, I do not think it should be the Ministry of Health telling us about excise rates. That's not their mandate. That's within the purview of the Ministry of Finance to make those decisions. The second one is, in fact, because I'm very much aware of this, there's a roadmap of increases in excise duty rates for tobacco, alcohol, and even for non-alcoholic beverages over a period of 3 years, starting from last year. Which has been agreed. In fact, the rate of increase for tobacco last year was over 100%. Now, it is counterproductive and it's not good for investment signaling if you agree a roadmap with an industry to increase their rate And then you turn back midway into the implementation and you change your mind and you do further increases without using data and evidence to support that decision that you're making. And I would also tell you authoritatively that the naira scarcity that we're just coming out of has significantly affected these sectors, among others, whether it's beverage, non-alcoholic beverages, alcoholic, and tobacco. Significantly, their sales were down. For some of them, record decline. So this is not the right time to then introduce additional taxes that can now kill a whole sector that is employing millions and millions of people directly and indirectly. I think we just have to always take a step back. Whether it's the IMF giving us a recommendation, whether it's an interest group, we have to always rely on data and evidence to say what is in the best interest of Nigeria, and that is the way policies should be developed and implemented.
The World Bank and IMF is obviously also worried about the drop in FDI, which is, of course, affecting a country like Nigeria, and not at this time where we need those inflows. And they are blaming this partly on divergent trade patterns across countries. What do you think is responsible for the drop we are witnessing at the moment with FDIs?
Yeah, that's an interesting question, Tolu. So you have to always think about the fact that money flows in the direction of where it's needed, where it's going to be taken care of, where it can see some level of certainty, whether also the risk-adjusted return is attractive, whether there's safety, right? So these are the considerations that investors would normally take into account before they decide where to put their money, whether they are even domestic investors, but even more so for the international investors. So what we have seen, first it was COVID-19 that came unannounced and we're not prepared, so the world panicked, and that led to many central banks around the world, literally printing money, quantitative easing, to put money in the hands of people to keep the economies running. So unfortunately, one of the consequences of that is that post-COVID-19, we now have to deal with the inflation that has created. And that meant that many countries, particularly the developed countries, were having to increase their rates. So the US went from below 1% to over 4% in a short period of time. We saw that also in Europe, we saw in the UK. And the more these developed economies increase their rates, the more that those who have invested and have monies in developing countries like Nigeria are likely to take their money out and, of countries in Africa, for example, and take it to a place like the US. So that on one hand means your ability to attract and even retain investment is significantly reduced. On the other hand, because now you don't have enough investment, you're unable to attract enough FX, you may not be able to meet your demand for FX. So your currency will depreciate, you're not able to raise enough taxes. And then what happens next is you face the risk of a downgrade in your credit rating. That has happened to Nigeria, whether it's Moody, whether it's Fitch, we have been downgraded. And when you are downgraded, in fact, some of the investment you have, you will no longer be eligible. They'll pull out those investments because some of them are institutional investors where their constitutions does not allow them to invest in certain grade level of investment. So it's almost like a self-fulfilling prophecy, right? It is when you now need a lot of these inflows of foreign direct investment and FPI that you're struggling. Now, if you now put on top of that the peculiar issues we have in Nigeria, whether it's insecurity, but even more so, policy incoherence, it makes it even more difficult for you to attract those investments. So it's not surprising that Nigeria, many countries in Africa have not been able to attract the investment, the much needed investment over the past few years. And without investment, it's almost impossible, right, for you to have development and for you to have economic growth, particularly when you now need it to create employment, to lift people out of poverty, And given also that inflation has been very high and remains high despite all the interventions by the monetary policy authorities.
IMF says subsidy removal should be a decision of government, either a democratic or an economic decision, one way or the other. But I know that in true terms, subsidy needs to go. But are you worried about what will follow when subsidy goes, considering the present state of the economy, all of the challenges that small businesses face, and even the big businesses, not just small at the moment? So what do you think? And on the other side, $800 million loan, because it's a loan according to the information, we paid over a long period, interest rate is, well, fair enough, is also on the other side. What will this help cushion? How far can this go? It seems like a two-in-one question.
Yes, it's an interesting question. I'm not worried about what will happen if we remove petrol subsidy. I'm actually worried about what will happen if we fail to remove it. Because I think sometimes we don't speak about this other side of the conversation enough. The reality is that the amount we're spending on petrol subsidy today, in my view, is significantly inflated, either because you have fictitious consumption, either because there are people who are manipulating the system to their own benefit, but to the disadvantage of the rest of us. By the way, just to remind our audience, when the price of diesel was deregulated, consumption reduced by 50%, and the corresponding increase in the consumption of petrol was marginal. So where did the consumption go? It disappeared overnight. So if you remove the subsidy on petrol, I am very confident that a significant portion of what, in quotes, is recorded today as our consumption will disappear. You know what that will mean? It will mean a number of things. Number one, today, the number one pressure we have on FX for importation is for refined products. As of 2022, I believe was about 31% of our FX demand was going to refined products. If you cut that in half, right, you easily save around $15 billion of FX demand. If you save that amount, one, it will help you to be able to supply the market for people who want to buy inputs and materials. So you may have the cost of materials and inputs go down. Naira may even appreciate. We've seen in some of the countries that are, oil producing, they have not been suffering what we have been suffering. They have enough. In fact, Russia, despite all the sanction and everything, their currency has appreciated by about 31% over the past 1 year. So if your currency then appreciates, and government can say the extra dollars that I have now, I can supply that for the importation of diesel at the official rate. If you do that, the price of diesel today will reduce by almost 50% if they can also get the FX at the official rate. So what would then happen is whatever little increase you have in the price of petrol, you can offset that with the decrease in the price of diesel. You can also offset that by the appreciation in the value of Naira, such that there is dollars for you to service the market in terms of the real economy. Overall, in my view, this would then be a positive development. And then government will have the money to be able to do other important things. They won't have to pay. By the way, the amount we are paying now for subsidy is huge, but we're not even reporting everything because government is not reporting the amount of borrowing costs. They are borrowing from the CBN, from the public, at high double-digit rate. They are not including that there as part of the calculation. So I think from my point of view, we have to, as a matter of expedience, and to do so urgently, but to do that in a very meticulous manner, thinking about how do you protect the vulnerable people, how do you ensure that the benefit of the removal is something we can crystallize. There's no reason why Nigeria cannot say, let's refine at 2 million barrels per day. We are not there yet. and then export refined product, rather than even, the crude petroleum, we can export the refined product and make even more money, creating more employment in Nigeria, using the derivative to produce other products. And then fight oil theft. It's not rocket science. We don't need God to do that for us. Imagine if we are producing about 2.3 million barrels per day today. We will not even be talking about Naira at 750. So an inflation will be lower. So these are some of the issues that I think that this government, even though they are on the way out, and the next government.
Yes, so let's wrap up on that note now. Economic direction, debt sustainability. Everyone says it depends on the incoming government's policies. That's what IMF is even saying, and others. So what are these policies, the quick ones, the quick wins, the low-hanging fruits? If there are any, though.
Yeah, no, there are low-hanging fruits. I'll say the first one is to try and do currency rate, harmonization. The IMF in their report were also suggesting devaluation of currencies. I do not agree with that. I think where we are is we should focus on how do you first and foremost drive efficiency and transparency in the management of FX, and then how do you harmonize? We shouldn't be having those multiple rates. That for me is a quick win. It would also even open up for us to attract more FDI and FPI, which can help us supply the market with liquidity regarding Forex. Another quick win is the too many. You need to harmonize the collecting agencies. If you're able to do that, you will raise your revenue very significantly and also have, the stability in the FX market, which can start bringing back investment and investors to the economy to create jobs and help us spread prosperity rather than poverty as we have it now.
I must thank you so much for your time. It's always a pleasure having you on the program. Mr. Taiwo Edele's fiscal policy partner, Africa tax leader, PricewaterhouseCoopers. Do enjoy the rest of your day.